like to thank everybody for taking some time today to learn a little bit more about Columbus Gold. And for those of you that are our shareholders, we've got a lot of news coming up over the next few weeks and months, so I'll just run you through it. Before I do, I'd like to draw your attention to our disclaimer on forward-looking statements. We're going to be talking about 3 different resources here today, the conversion of some of those into proven and probable reserves, and also a feasibility study, so an economic study on one of the deposits. Columbus Gold operates primarily in 2 jurisdictions. That's in Nevada, USA, and in French Guiana. So let's start in French Guiana. It's located on the northeastern seaboard of South America. It is unlike any other jurisdiction in Latin America. It is actually French soil. So it's an overseas department of France. Its citizens are French citizens. They carry European passports. The currency there is a euro. It's also home to the European spaceport. Now, France has been in the news over the last little while. We've got presidential elections taking place tomorrow. And for ourselves, one of the candidates, Macron, he's a very strong supporter of our project. In fact, if you go to our website, we've got video footage of him at the Montagne d'Or site, splitting core, and meeting the locals. But it really doesn't matter who wins the election tomorrow. This project is important for French Guiana and for France. With regard to French Guiana, we're looking at a place or a region of France that has about 250,000 citizens, and right now they've got over 20% unemployment there. And so the Montagne d'Or deposit or project, if it's built, has the ability to create 750 full-time jobs, plus another 3,000 indirect jobs during operations, and up to 1,000 jobs during construction. So it can be very, very significant for the population or for the region of France. And let's just move this along here. I'm losing time. The project's accessible by all-season forest road. It's about 125 kilometers from Tidewater Seaport. It has a 65-person full-service camp and a 500-meter airstrip capable of landing small aircraft. Now, I'll just jump into some of the results from our feasibility study released on March 20th. That also gave a new resource estimate for the project and also the first proven and probable reserves. So the overall resource is about 5 million ounces. 3.85 of that million is in the measured and indicated category. Another 960,000 ounces are in the inferred category. Out of the measured and indicated ounces, we managed to engineer 2.75 million ounces of proven and probable reserves with an average grade of just shy of 1.6 grams per ton. And now that is the main deposit. And I'm going to jump into a little bit about expansion possibilities of the deposit before we get into the rest of the results on the feasibility. So here I just want to point out that, right there in the middle, we've got our 5 million ounce deposit. And last summer, we acquired these 2 exploration permits to the east and to the west of the known mineralization. And if we zoom in, here's our deposit here. We are now in the middle of a drill program that's testing the eastern and some drill fences to the western extension of the deposit. We're also drilling below. So we had 3 years to put the feasibility study together, and within that time we didn't get a chance to test at depth or some additional targets on the property. And we initiated that drill program during the first quarter. Assays are pending right now, but we should get some of those in the not too distant future. With regard to the deep hole drilling underneath, you can see that most of the drilling was confined to the first 250 meters. And that was so that we could put a pit-constrained resource together and get on with the engineering. But these are greenstone deposits. They generally go to tremendous depths. And so we've completed a 760-meter hole, a little over 3/4 of a kilometer long. to test these mineralized structures at depth. Again, assays pending, and we will get those results to you as soon as possible. We also announced in March that Nordgold had completed the feasibility study. They had met their spending requirements and earned 55% of the project. And that's how we funded it through the bear market over the last 3 years. Currently, we are advancing the environmental impact assessment. All the baseline data has now been drawn, so it's all desktop studies, and we expect that before the end of the year this year. Once that's filed, then we'll be officially in the permitting process, and it'll be time to make a construction decision. Oops. There we go. Just a couple of quick notes on the results of the feasibility study. We had a net present value of $370 million US. Our internal rate of return came back at 18.7%. There was some market commentary that it fell just shy of the 20% that most people like to use as a benchmark. And we do have a number of areas where we see room for immediate improvement, so I'll point those out shortly. Basically, it looked at a project that over the first 10 years of mine life would produce an average of 273,000 ounces a year at an average grade of 1.7 grams per ton, making it one of the higher grade open pit gold projects in the Americas. And at over 250,000 ounces, it's a nice bit of production on an annual basis. There aren't that many projects capable of that at this time. And over the life of mine, it would produce about 2.5 million ounces. Now, we did see some room for project enhancements right off the bat. In the 3 years that Nordgold came on to advance this project with us, we delivered 3 resource estimates, 1 preliminary economic assessment, and a bankable feasibility study. So there was a trade-off on some things that we wanted to do but didn't have the time to do them to meet our deadline. Now that that deadline's met, we can go back and revisit those. One of them is pit optimization, and so those are desktop studies that are taking place right now, and we do expect that we can see a slight increase in our NPV there and also the internal rate of return. We also have 960,000 ounces of inferred gold ounces that are sitting within the pit. In other words, our feasibility study was going to move those ounces, but wasn't going to give us any credit for them in the numbers that we have. So we've got an infill drill program that we're preparing with our partner Nordgold right now. They'll be paying 55% of that program. We'll be paying 45%. We'll upgrade 200 to 300,000 ounces into proven and probable. Again, that will increase our net present value and move our internal rate of return over the 20%. Most likely our proven and probable reserves will be over the 3 million ounces at that point in time. So that's all taking place right now. We don't have to wait years for it. It'll be done in the next few months. So we're excited to make those improvements right away. And I don't have much time for Nevada, so I'm just going to say we made a fabulous discovery there. Our exploration partner, Cordex, have been in the business for 40 years. They originally discovered the Carlin mine back in the 60s, or John Livermore did, one of the founding partners. And we've had an exclusive agreement with them since 2005. At East Side, our main project there, we've got 2 resource areas, and we're drilling a 3rd right now. Perfect infrastructure. The yellow line there is US Highway 95. The green line passing through the project is a high-grade or a high-voltage power line. So it's just a miner's dream. We did announce a maiden resource for the original zone at the northern end of the property, about 721,000 ounces gold equivalent. That zone is open to the west, to the south, and at depth, and we're preparing drill programs and to expand those resources. The historic resource down at the southern end is just over 250,000 ounces at 1.8 grams, and there's room for expansion there as well. And as I mentioned, we're drilling target 5 in the middle, and I'll just point that out. This is where we're drilling now, historic original zone. So lots of room for improvement there. We're 153 million shares issued and out. We were trading at 90 cents a share, plus or minus, a couple of weeks ago. Now we're down to 70, so we're on sale. Please feel free to come by my booth, ask us any questions. Jorge and I will be there. Thanks for your time today. Sorry, I ran over a